Well, all the talk today may have been about soon-to-debut Twitter, but once again, the Dow proved that it's no quitter. Another all-time closing high for the blue chip barometer. It's 33rd of the year, more than a month worth of closing highs. There was little economic news to drive stocks today, but some positive data out of Europe didn't hurt. Nice gains in Dow component Microsoft helped too. It was a different story, though, over at NASDAQ. Selected tech shares felt pressure, and the electric car maker Tesla, a NASDAQ company, fell nearly 15% after yesterday's earnings report and forecast. Here's a look at today's closing numbers. The Dow up 128 points, ending the day at 15,746. The NASDAQ lost about 8 points, and the S&P 500 was up 7, now just 1 point away from its own record closing high. Well, with the Dow at a record, what's the one thing that could derail the rally? We will ask top market strategist Joe Duran what concerns him the most later in the program.
It's almost here. The initial public stock offering for Twitter, the most highly anticipated IPO of the year. And the microblogging service will price those shares tonight ahead of tomorrow's debut. Estimates right now call for a share price as high as $27 apiece. That's above the range of $23 to $25, and that was already raised from earlier estimates just days ago. Twitter, which has yet to turn a profit, currently makes its money from advertisements. But anxious investors are asking, how will the service raise even more revenue in the future? And what's next in Twitter's pipeline? Julia Boorstin takes a look.
The fact that Twitter's core business is ads means potential to sell stuff not just when users shop later, but right in the moment on Twitter. In August, Twitter hired former Ticketmaster CEO Nathan Hubbard as its first ever head of commerce. Twitter could use information about users' location and interests to offer products or deals. The big leap will come when Twitter allows users to link a credit card to their account for one-click purchases within Twitter. You could say, buy a pizza from Papa John's or donate to, say, the Red Cross. Twitter could take a cut from transactions. This would allow hotels to offer empty rooms, concerts to sell last-minute tickets, or restaurants to fill tables.
Of course, advertisers could make it a little bit easier for people to transact. That could be another one. But that, I think, again, needs a larger base. And I think, that needs to be developed.
This would be a streamlined version of Twitter and Amex's Sync partnership, which links credit cards to Twitter profiles, enabling people to tweet to purchase. Twitter could also partner with companies like eBay, Etsy, or Amazon to link accounts to enable purchases without inputting new credit card information. Commerce isn't the only way we can expect Twitter to branch out and grow its business. Many say Twitter will start earning more from licensing its data, but the easiest way the company can ramp up revenue is overseas. 3/4 of its traffic was international in the third quarter, but that only generated a third of the company's revenue.
The biggest opportunity right now for them is to monetize internationally within, for advertising. They only have 0.5% of the worldwide online advertising market share. So a big, big opportunity.
And Twitter's purchase of mobile-focused ad exchange MoPub in September will allow Twitter to improve its ads with real-time bidding and improved targeting, while it grows revenue from MoPub's separate business of serving ads across the mobile web. For Nightly Business Report, I'm Julia Boorstin in Los Angeles.